Good morning, everybody. Welcome to the Flow Show. Hope you're all doing well. Morning, Patrick from Florida. Blimey, you're up early, mate. I don't know what's going on here. Hope you got the coffee on. Morning, Kay. How you doing, mate? I wish I was in Florida.
Yeah, or it could be from Fleet Street as well, though. Good morning.
Yeah. Oh, yeah.
Good morning, Ryan. Good morning, everybody.
Should
Florida,
we move to Florida?
Hmm?
Should we move to Florida?
Oh, I wouldn't mind. Is that the retirement state in the US?
Yeah, it is, mate. Yeah.
Oh,
Yeah, it is indeed. So,
Patrick must be the exception there.
yeah, I know Florida
There's been
quite well.
blood in Florida.
Yeah, I wouldn't mind going back there. My grandparents used to have a place in Hallandale. Used to enjoy that, going to the Rascal House, the old deli place. Oh, yeah, I know a few old places around there. I can't step foot over there without putting on about 2 stone, though. So, yeah, would be nice. Anyway, one day, once we made our fortunes, still working on that. Right, let's get about 20 minutes away, for you know it well then. Right, let's see what's going on in the world of trading. Japanese Economy Minister Saito said energy in Japan is not currently being impacted by the Middle East, but they're watching the situation closely. Obviously, they've got running subsidies on energy at the moment, which are due to end June, I think. So any big uptick in energy prices might get them keeping those subsidies in play a bit longer. Finance Minister Suzuki says a weak yen has merits and demerits on the economy. But more importantly, we've got some comments from him as to what he discussed while over in Washington. Said that he explained at last week's meetings that Japan's strong concern over how weak the yen is pushes up import costs. And then he said he won't deny that last week's discussions in Washington have laid the groundwork for Japan to take appropriate FX action. So sounds like he might have been hankering for some passes, getting the green light from everybody over there. Not that they need it, but it's always nice to know that you're going to have people who hold you back. Do you think maybe that any intervention will be more concerted effort? Okay, do you think they'll get others involved and make it bigger than the interventions we got previously?
No. I don't think that we've been discussing that for a few days now in the room as well. It's still not my base case. I don't think so because when you talk about, well, okay, let's first talk about like the different ways of intervention. They can just intervene themselves, ask their agent banks to go in the market, and actually. Bank of Japan has a dealing code on EBS as well. Well, they had. They could intervene themselves, but usually they do it via their agent banks. But they can also instruct their foreign officers. They have officers in London and the States to call up the banks and intervene. Then the next stage would be, and that's always. Room to misinterpretation. They could ask the Fed and ECB, even the BIS, to join them in the interventions, but they would still do it on behalf of the Bank of Japan. So that I think is as far as this intervention, if we get one, can go. There is absolutely no. I don't think there is anything that is going to push ECB, Bank of England, Fed to come together and intervene to support the yen versus their own currencies. Yes, they can participate. I have seen that in the past. And that is quite messy all the time because ECB would sell euro yen basically, but then they would sterilize the euro side and buy the euro dollar back. So that's the real mess in the messiest intervention. If other countries agree that the yen is really weakened too far, we could go as far as that, or something in between that and an accord. But an accord like the Plaza style, Louvre style, or that we had, I think is completely out of the question, because there's no stress in other currencies or in other systems to push like FOMC or US Treasury in the case as well, because MOF talks to US Treasury, Bank of Japan talks to the Fed, of course. But there doesn't seem enough stress in any of the other systems to me to come to a global accord, which would mean basically putting the dollar lower. Yeah, we have heard about Lagarde talking about the currency. We have heard even, what was it, Ramsden yesterday talk about the currency. But I think it's two completely separate things here. They are talking about what may happen if they cut before the Fed. That's how I read it anyway. But the Bank of Japan, well, Japan, the MOF, and then also South Korea, they got the green light in Washington to intervene. That much is clear. They spoke to Yellen. They spoke to other people as well. They've got the green light. That is 100% near certainty, right? But the form of intervention will be important. If it's a standalone Bank of Japan interventions, they ask their agent banks to intervene, then we are going to see the effect immediately 200, 300, 400 points, perhaps in several rounds. The second layer, if the Fed and ECB join into the interventions, then we should know after a while whether it is on behalf of the Bank of Japan or if it's like a real joint plot or play to put the dollar lower virtually. So there are several possibilities. My base case is still that it's either Bank of Japan alone or the others on behalf of the Bank of Japan. I don't think that we are at a point where any other central bank is ready to say that their currency is too weak versus the dollar.
Yeah, no, I agree with that. I don't think there's going to be any accord or anything like that. Yeah,
no.
We know that all central banks, they hold balances at other central banks as well, and plus we've got all these swap lines still going on as well. So yeah, it's
a very
that's what I meant as you discussed, that sort of concerted effort where the Bank of Japan tells them, asks them to sell a bit on their behalf. But yeah. So anyway, he's got the green light from Washington.
Definitely.
We have to see what happens.
Definitely. People should really realize, our audience here and people who haven't been in the market for that long. I've actually started trading in markets just before, a couple of years before we had the Plaza Accord. It's a huge decision, right, to make. And if people, and I advise people to go back and look at long-term charts, overlay and for once I will talk about it because I never look at it for my trading, but look at what the dollar did, the Dixie did in those days versus inflation, versus prices, versus what we have now. There is zero correlation or zero comparison in the size of the moves that we had in those days compared to now. The markets now, barring the yen, of course, are extremely calm versus then.
Yeah, very much so. Right, well, someone else over in Japan who's having a little talk about the yen is one of Kishida's officials, Katayama, saying that recent yen falls are excessive and out of line with fundamentals, and that Japanese authorities could intervene to prop up the yen at any time. Also, the chairman of the business lobby, Kinderman, says he thinks the government will make an appropriate decision on intervention. That was in Kyoto News. Ueda was out as well, saying we don't have a preset idea on the timing or pace of future rate hikes. If our price forecast changes, that will also be a reason to change policy. Why is that comment important? Well, Friday's meeting is a forecast meeting, so we'll be keeping our eyes down or open for what comes from that. And if I show you quickly, because I did print it off, or rather not print it off, but I did screenshot it. This was the last forecasts. So we need to be aware of these to see what changes on the price front, because that could be a big indication of where they see forecasts. If these are all shifted up, that's going to be a hawkish tilt. If they're kept unchanged, that's obviously going to be unhawkish, but the market won't take kindly to that if they don't see a big shift or see any shift in inflation. If some of those forecasts go down, well, you'd probably see 156 not long after. But anyway, that's we need to keep an eye on that from Friday as well.
Big day on Friday.
Yeah.
Big day on Friday, I'd say.
What else? Well, I lost my place now. Sorry, mate. Was you about to say something?
I said, yeah, big day on Friday for yen traders.
Yeah.
I would be really on my toes on Friday, because we could have like quite significant moves, and Suzuki may really choke on his sake on Friday and decide to press a few buttons here.
Yeah, we're going to have to get up for that, won't we?
Yeah, I think so.
Yeah, there's better be two on the trot, unheard of. Ueda also said that trend inflation is still somewhat below 2%, so we need to maintain accommodative monetary conditions for the time being. Over to the Bank of England, and Haskell is not moving to the rate cut camp anytime soon, it seems. He says UK food price inflation is unusually high and the labour market is extremely tight. So some undovish comments from him there. We've had a load of data out. As we said yesterday, it's PMI day across the world. Numbers largely, some are moving both together, some are up, one down, one up, whatever. So we'll just go through them and see what's what. Over in Australia, manufacturing improved, services gave back a little bit there, but still contraction for manufacturing. Over in Japan, manufacturing improved and so did services, although still manufacturing is in contraction there too. Coming over into Europe, we had some borrowing numbers which came in a little bit higher than expected. Also the yearly numbers as well coming in higher over what the OBR forecast, which is no great surprise considering they couldn't forecast them getting up in the morning. Anyway, over to France, worst reading on manufacturing. 44.9 was expected to rise a small pip, though services did move into expansion, so that's some good news there. Germany as well, worst number on manufacturing, better number on services, a big strong number on services there. The pan-Eurozone number reflecting all that too, services up, manufacturing it down. Then the UK, similar story, manufacturing managed to get its nose into expansion, now it's dropped back into contraction. Services though, a decent boost there, 54.9. This is the bigger number within the UK economy. Services the bigger sector, as it is in many countries nowadays. I did my usual digging through all the PMI reports to see what's going on. Over in Japan, there were stronger input and output costs for both services and in manufacturing. Employment was strong in manufacturing, but unchanged in services. Over in Australia, employment was up in services, manufacturing was flat. Input prices were up in both services and manufacturing, but selling price rises eased. So a little bit maybe of a margin squeeze there. The report said that firms are not raising prices as much to try and get business through the door. In France, they saw the highest input costs for 5 months, highest output costs in 3 months. It was also the strongest jobs picture across or since July 2023, all driven by the service sector as employment in manufacturing declined. Germany, in prices, rates of both input and output costs ticked up, but they were roughly in line with their respective long run averages. There was the second fastest jobs growth in services in 10 months. And again, manufacturing was negative, though less than the record numbers they saw in March. So overall, summing it all up, and the UK was pretty similar as well on the price front, still heavy input costs and output costs. So overall, as the Eurozone number said, that the price pressures picked up in the Eurozone alongside the improvement in output and hiring. Some of that was linked to wage bills. So we've got this bit of disparity coming in. I don't know if there's a bit of lag between this PMI data, because for months we've been reading that price pressures have been growing. There's been a bit of easing, but on the whole, price rises has continued to happen. Yet we're seeing CPI, the hard data, still ticking down. So either we're just seeing a small part of the makeup of inflation via these PMIs, and firms obviously see these sort of price changes quicker than we do in the hard data, or there's a lag, and all these price rises that we've been seeing for the last 3, 4, 5 months are going to start hitting CPI and the hard data soon, which is going to make it a bit difficult for central banks like the ECB. So there's a bit of context needed as to what we're seeing in this sort of data and what we're seeing in the hard data, and whether that disparity is going to continue. But if you read those reports, Kay, it doesn't sound like an environment where central banks should be cutting, really.
No, because if you, of course, right, as you say, those manufacturing data are not really great, right? Especially in Germany, which is there's still quite a bit of it's one of the manufacturing engines of Europe, and I reckon that's also one of the reasons why we have seen the euro shoot up on those services and on prices, perhaps, and then the market going like, well, okay, it's not only prices supporting an economy. And that's the idea. That's the main idea I'm having right now. And I've reacted on the back of them for a while, and then saying like, well, yeah, if the US shows the same thing this afternoon, we are going back to square one today. But it's a good question that you're asking there, whether it's going to show, or whether those sticky inflation numbers are the result of. And that's a question which I'm afraid we can only answer further down the road. On price pressures alone, it is clear that the central banks here are not in a position to cut, because especially on that UK report, those pressures are the highest since, what is it, July 2022 or so? That's or July last year, or July 2022, I don't recall exactly, but that is not something that Ramsden and Bailey were taking into account, right? So yes, that is that may push the market to start to reflect again on what they were trying to reprice on Bailey. But I've looked at the yields market after the numbers. We've seen a little bit of a move higher, but we're talking about basis points. We're not talking about even 10 basis points. We're talking about anywhere between 2 and 5 basis points. So the market is still wondering whether it needs to move the needle a bit. This is, to be fair, and this is a bit of a difficult reading. I'm going to say on these numbers, especially that we haven't seen the US yet. Because if the US show exactly the same, then for us traders, we're back ball in the middle, you know. And even if it's stickier in European continent, UK included, if it remains stickier there, it will be the same across the pond, and we are back to where we were yesterday evening, basically.
Yeah, pretty much so. And these things tend to feed into each other. You know, if you got to think, you know, even just looking at the US economy, you know, the US economy being strong, it's okay if it's strong on the domestic front as well, great. But there's also international trade. So if people are doing business with the US, they've got to be doing business in their own country. You know, you don't go buying tons of stuff from the US unless you've got a market for it in your own country. And if you've got a market for it in your own country, you've got activity. So, trade is still ticking over, and those price rises will follow, because if prices are going up in Europe and you're in the US buying from Europe, you're paying higher prices, and vice versa. So it's a bit of an infinity loop sometimes with things like that. So yeah, it's strange to see different areas seeing inflation dropping while other areas are staying sticky. Hence why I think that I think perhaps ECB is maybe starting to lean a little bit too dovish and getting a bit complacent about inflation. I think they're probably panicking a bit because inflation is now at 2.4%, and they've always told us, or the last few months they've told us, they will be cutting as inflation approaches 2%. They won't want to get to June and find out inflation's at 1.8%, or they've missed the boat yet again and face yet another credibility issue, because then they'll be chasing inflation down as opposed to trying to control it. But yeah, I think that's why maybe they're getting a bit all excited about this June date. But
well, the windows showed us June. Huh?
It's what? Sorry,
the windows showed us June again today.
Yeah,
overnight. I mean, I think there's been a pact over there between the doves and the hawks, and saying like, oh right, let's block it off until June, and then you doves, you can have your June. So if they don't cut in June, it's going to be a bit of an Armageddon in Euroland.
Yeah, exactly. Yeah. Do you know, off the top of your head, have we got one or two more inflation reports before June?
I'll
have to have a look.
What are we now? We are end
There's
of
going to be
April.
at least one.
We're end of April. I think there's only one left. Huh?
Yeah, potentially. Okay, we'll check that.
Because they're very early June. Huh? They're on the 6th.
Yeah. Yeah. So we only got we only get the report in May. Okay, doke. Well, yeah, as Kay mentioned, the Guindos taking a line from everyone else. A June cut looks like a set deal if there's no surprises. Centeno, though, he sees total rate cuts could exceed 100 basis points. So that's virtually a cut at every meeting from June. I think he's going to be away with the fairies on that call. ECB's Paxalides says ECB decisions hinge on data and there's no set path. Quick bit of data to look at out of Canada. Yesterday, we got some PPI data there. Bit of a hot number year on year for raw materials, and a positive, month-to-month number for raw materials. Year on year number up 0.8%, turning around a negative the month before. PPI as well, coming in as expected, another positive figure, and down, but not as much as last month year on year. So maybe some easing of price pressures over there where they were coming down quite significantly, and maybe that's now looking a bit stickier as well. Something to keep an eye on for the Bank of Canada, because we know Macklin likes to flip-flop like a flippy-floppy thing. Fed cuts, SocGen, they see no Fed rate cuts this year because of sticky inflation. They're expecting inflation to maybe bottom out coming into that June period, and maybe starting to creep higher. We've got some big earnings today among the selection or the choice numbers. We're getting General Motors, Tesla, Visa, UPS, General Electric. Those auto ones I'm going to be particularly focusing on, given all the stuff that we've seen in the news over the last few months about that sector. We'll see if they're holding up, or if we're seeing one part of the consumer landscape changing. Russian Foreign Minister Lavrov says Russia and China have almost de-dollarized their trade. There's been a big move to rubles and yuan for trade between those guys and getting rid of dollar out the equation, and that seems to be nearly done. Obviously, lots of stuff going on there, backdooring oil into China and vice versa, and I still suspect that maybe China's buying some gold for Russia as well. So they nearly de-dollarized their trade. Kay, any thing you want to bring to our attention?
No, but I think in the what you just said about China and Russia could be actually very negative for both their currencies. And actually, if they are done, it may also mean that gold is now starting to correct because they will have bought their the gold that they needed to de-dollarize, as they call it. So perhaps Lavrov gave a little bit of a hint to the market there that gold may start to go back to 2K to 2000 because I mean it's no secret that they are responsible for at least um, well, it's hard to put a percentage on it, but at least being like the main driver of this whole thing, and the Middle East shenanigans have added to the picture, obviously. But they were the main drivers of this whole moving gold. So yeah, I'm starting to think perhaps we there is a bit more room to come down now if they are done, of course. Always the thing, but it does look from yesterday when they declared that it's actually quite funny that gold lost about how much is it, 50-60 bucks now.
Yeah, funny enough, I was looking at that chart just before. It does definitely start to look like or smell like that big bid has evaporated. Alternatively, it could just be they've pulled their bids and they're going to wait to pick it up at lower levels rather than keep chasing it higher. But
Well,
yeah, a lot of the
don't overestimate their shrewdness there, you know.
exactly.
Don't
It's
overestimate them.
and a lot of this is probably a lot of dip buyers coming in thinking, yeah, you know, this is a dip we've been waiting for.
Hmm.
We hardly got one in March, and so any dip they get, they hit. But when they don't get backed up by other bids, that soon gets put to the sword, and that's why you sometimes get a bit of a deeper correction. But yeah, it's got some scope to move back down. 38.2 fibs, not until 21.20. So quite a way to go there before we test the trend, and that's only the second, really a second leg of the trend. You know, there's a bigger trend going on back, 2018. So all moving parts, and we get to see how different aspects of this trend. Obviously, you get down to 2000. That's going to be a big area, 20, 75, 80 area that we had those big tops at, big triple tops at. That's going to be important as well if we get there. But let's see what goes on now. Patrick, I haven't actually kept up with the situation. If you're talking about China and treasuries, I don't know what the latest numbers are there. Treasury holdings a while back were falling. I don't know if that's still the case. Kay, you had any? You had your finger on that pulse at all?
Yes, the Chinese treasury holdings have come down, but that not in the way that we can talk about a complete de-dollarization, Patrick. They have come down. They at one stage were bigger holders than Japan, but that's been completely undone now, and Japan has really taken over the baton again. They just thinking with our increased issuance, and they may reduce the buying. Oh, in that sense, um, hmm. I'm up to now. I find those U.S. Treasury issuances have been absorbed relatively well. So this Chinese thing about them buying less treasuries has been going on for quite a while. Yet the U.S. Treasury did find buyers most of the time. It's been a bit of an on and off situation. We had a few failures, and we had some who were actually surprised to the better side of things. Um, Up to now, the U.S. Treasury has found relatively okay buyers. We do have again a reasonable schedule this week, right? Especially the belly between the 2 and the 5 years. There's a bit going on again, and we're starting actually today, right? We had the short end yesterday, and today we're starting the 2 year. It's going to be a case of it's going to be a case of really knowing how the indirect bidders behave in the U.S. Treasury environment, Patrick. And I must say, I'm not going to make any bets on it right now. It's all going to depend a lot on data as well. But where I think there is a risk is that if we remain stickier on a lot of fronts, and if let's say, for instance, the job market is really holding up, and the economic data are holding up in the US, there may be a point where they won't find enough buyers anymore, and that's still a risk, I reckon. And if in combination then with what's happening on the Chinese, that may be a bit of a risk. I'm always like thinking about this possibility, that all of a sudden we get a few very bad auctions. It is a possibility.
Yeah, one thing to keep an eye on. I'll pop a link. Well, I'll pop you the link there. You probably already know it, Patrick, but just in case, I'll pop you. Crap. Hang on. Give me 1
You're on the
second.
auctions page.
No, I'm on the tick flows.
I'll put the auctions page up on there, so
Yeah.
people can follow the auctions.
So there's the that's where they report. I think they do a quarterly report as well.
Yeah,
on
there
tick
is.
flows, so that's all the securities and whatnot.
We're expecting, and Dale was talking about that as well on a few meetings. We're expecting the U.S. Treasury to announce their plans, right?
Yeah, the next quarter funding plans. Yeah.
Yeah,
So,
and I still need to look it up.
Yeah. So anyway, there's some information there, Patrick. If you want to look at it, I don't know if it's going to directly answer your question, but at least it gives you an idea of the flows and where they're going and whatnot. Right, let's have a look at what's going on in markets. Dollar yen, we're still banging up. We managed to get into the 80s. Look at that. Woohoo! Spent a few days at 78. Now we're moving up into the 80s. Let's see how long we stay there. I've been saying it the last couple of days. This is building up into another 152 at the moment. And again, I'm wondering. We know there's likely to be barriers there, but again, it's just smelling like there's some official interest up here. I don't know if they're doing some sort of secret smoothing or whatever, something that won't appear in the intervention reports that we get. But it's this price action again up here. It's very, very suspicious. We're over Japanese year end as well now, Kay, aren't we? So that we can't even put that excuse to it right now, why there's so much up here.
I still think it's rather the market being reluctant to buy it up here because of the warnings. We haven't tested the 90 figure zone yet, right? So we don't know yet whether it is the new 152. It could be, but we haven't got any more information, not enough information yet. I'd say. About the 155 in the dollar yen. It is a bit of a target zone that I've shown already on some extensions. I don't know. I really think it's just the market being reluctant to take it any further. Although
no one's saying it either.
Look at the rest. It doesn't go down. For one, because if it would be like barriers and the barrier protection, we would have seen perhaps some people coming in defend. Well, the defense can start from 80, but usually those people wait until at least 85, 90 to start to really defend it, because they don't want to burn too many matches before really the fight gets heats up.
Yeah.
This is not the way that I experience anyway. Barrier defense also. Well, I don't know. Perhaps perhaps they've asked their agent banks or the mega banks in Japan to go and sit on top, but I'm not going to take any bets on that right now until we get even closer to 155. I'm still thinking it's just the market being a bit reluctant. But whatever happens, it's not coming down, that's for sure.
Yeah, exactly. Unless we get the odd headline wobble, but that never lasts, as we've seen the last week or so.
Yeah.
Euro dollar was looking a bit perkier, had another move up towards that 107 area, got a bit close, but ran out of puff. Just on that better services data coming out, likes of Germany. Still not ready to have a crack at this level just yet. So we're still in the range at the moment. Same thing could be said a bit for cable. It's stopped going down. It's had its little nudge towards 123. I think we got under 123, 123, 122.99 yesterday, although that might have been a retail price rather than a main price. So I think it's looking like we're going to be playing the same game, 100 pip range, 123s, 124s, and see what happens in between. That move in the euro helped euro sterling with another lift up, and here we are hitting the bloody zone again. You know, I've been following this for God knows how long, and you have too. This zone up here is one of those ones that has seen a lot of action going back when we've been in there. This is one of those times where I don't want the level to show up because I'm long. I don't want it to stop there. I want it to keep going. But this is the important lesson when you're trading. You can't ignore what's standing in your way to making profits. It's no good buying at a level and saying down here and thinking, yeah, I'm going to set a target of 88 if you can't get through some of the other tech levels. So these are important because yesterday I took profit off at 86.40 because I thought this might show up, and it's shown up twice now. And you've got to respect it. So I'm not going to make any more profit unless we get through that. And if we don't get through that, I'm going to have to decide what I do with the profit I already have got, whether I start bringing my stops up and locking it in. I'm not too fussed about bringing my stops up off my 85s because we've been playing this game for months. So, you know, the clock is on my side in terms of you don't need to rush to make a decision in this one. But for now, if we are going to continue this, we need to get through this zone, 86, 45, 50, and all the way up through 86, 70, and start holding above that. Start holding above that, then we might have a look at 87s and that big old 87.20 level. Another one that's been a thorn in the side for those of us who are long. Dollar CAD's looking a bit weaker as well. Bit of a, is it another mix landscape again, Kay, with some of these, and the commodity currencies like dollar MEX is still looking quite well bid, but dollar CAD's looking quite weak. So things are still a bit all over the shop. You know, in some of these commodity currencies, it looked like dollar MEX might have been heading back down once again, but it's holding up above this 17 level. So, you know, I don't think perhaps maybe we're not done with this upside, and sellers aren't so keen to rush into this one at the moment. So that's still my key level, 16.99, 17.05, that sort of area. But just to hop back to dollar CAD, we're messing around 136, 136.50 is my main level below here. So that's going to be one. If we're going to keep this trend going that we've seen, let's go come in a bit, then you know, the yearly trend, keep that in play. We've got to hold here. Back under there, then we might just be going back into the Malays, trading down to 135s, that sort of thing. So I don't know if I might have a little tap on there, 136.5, just play a figure trade off that one. I'll keep an eye on that one anyway. Kay, did you want to, who was asking about silver? Someone was asking about silver.
Yeah, I'm going to have a look at it.
Which I'm sure
And he was asking about the dollar CAD, and but Ryan just said exactly how this thing. I think we are extremely neutral here around this 137. If you stick on the dollar CAD there, we're very neutral around here, because if you look at the move that we started from April, like the really short term one, we are actually on the 38.2 whatever, and those are levels anywhere between the 38.2 and the 50% where things tend to look for a bit of a continuation or stalling or fresh direction, and that may be just where we are right now. As we have been saying already, it's really on and off. The correlation with energy is too fast thought for me to really wanting to trade on the back of it. And I would say though that if anything, I'm finding Canada to do relatively well in the global scheme of things, because we could have seen a bigger move, or at least keeping the highs there above 37.5 towards the 38, but we didn't. So to me, it shows like that the Canada is not too bad, not doing too bad right now, and we also see it on some of the crosses. And who was it there? Asking about Marianne. I'm going to have a quick look at your sterling Canada,
Yeah,
and
I'll hand it
yeah, we
over
can
now.
see it too.
I'll hand over just a sec. Yeah, Ali, just looking at your trade there. So I assume you've got the same 100 SMA as I have, which is coming in at 63. So I'm a bit curious as to why you're putting your stop above that level. If you know this area is a strong support level, why are you putting your stop above it? That doesn't look quite like the sensible choice. You usually put your stops below such levels, because what you want to do, you don't want to get stopped out there and it bounces 10 ticks lower and then goes all the way where you want it to go. So yeah, I'm assuming you got the same numbers. Obviously, as always, it's your trade, your decisions, make your money, your choice. But having a stop just above what's potentially a big support level, that seems might be the wrong way around for that one. Anyway, Kay, I shall pass it over to you.
Let me first then straight away look at sterling CAD. Marianne, are you short-term, medium-term, long-term trading? What are you looking at? Because I've put on the daily, which is a bit of a longer-term one. Just let me know what you're looking at. But if I look at this, that doesn't look very very supportive to me. Shorter term. Okay. So anyway, all right. Yeah, anyone can trade any time frame they want, but I rarely go below the 4 hours to be honest, unless I'm really like jobbing it around, and then I rarely even look at chart. I'm just hitting levels that I have in my mind, and and trade around. Yeah, I'll look at your 4 hours. But anyway, in the more medium term, this looks like we are starting to fail. Okay, that is how it looks, and also it kind of coincides with those Bank of England bots that were saying like, well, perhaps the sterling is not going to remain so strong. So perhaps they need to think about, perhaps the market was a bit far away from the date that they expect the rate starting to cut. But anyway, for the time being, this is not looking extremely supportive. So let's go down a bit. It's actually we are we coming onto a bit of support here, perhaps? Yeah. Okay. All right. So this looks like we may be in for a bit of support. Let's see where that is compared to the last move. Yeah. Yeah, perhaps here. But we've already rebounded a bit here right now. Look, 168.90, 169, the figure. I'd really be a bit careful about that level. We're back above this prior low here, which may be a bit constructive. But I would say though, it's still looking back at that other picture. It's not giving me too much confidence when I look at what happened from March until now. 170, yeah, 170. That's where we have to look at what's going on. So you're in between those levels, 169, 170. That is where you're going to have to make, if you want to trade it, you want to make your next decision. Either it holds around here, or it caps around here, 169.85 figure. That's we're in between those big figures. And look here, we have a bit of activity, yeah, between these 69, 70, 85 as well. So this is an interesting zone here on any bounces. Okay, this should be one that you keep an eye on if that bounces a bit more. Okay. I must say, Ryan, that I don't have a massive amount to show, but and look, I've also been onto the 1 hour. That's going to make Marianne happy, because I've seen this break here in the cable, and then on the back of the PMI we moved back above, but it failed. So in the really short term, sterling was looking a bit better, but still now it's still keeping, especially versus dollar. And the decision will be made, of course, in a few hours. But especially versus dollar, that looked like a small, weak bounce, in my opinion. So keep an eye on what's going on in the cable this afternoon. 123.85, 124.05, 05.15. Okay. If we get back up there and then fail, we could see a bit of continuation. But my base idea is that we may see the same thing happening in those US PMIs than what we've seen today. So perhaps the same divergence between the manufacturing and the services. But if that's the case, then we are going back, like we say in football terms, ball in the middle and 1-1, and we start again, right? Just showing again that 155.05 here, but it's just an extension level in the dollar yen. It's not something, if we just let this market do, it's probably going to trade even higher. But decision is really on Friday. I've got my put running in case they intervene, and that's it for the time being. I'm really not touching anything in the yen because I can't chase it here. But it's not going to go down if the Bank of Japan doesn't do anything, right? So that is about the situation that we have right now in the Japanese yen. Aussie really shying away from the danger zone, but we are again trading around 64.5. So this is still a bit your pivot zone in the short term on the Aussie dollar. If we get weaker data in the afternoon, if US actually surprises with some weak data, I guess this is going to trade very quickly back up to 65. If the data are in line with what we have seen so far, that is somewhere stronger, we are going to go back to 64, the figure. I'm just going to have a very quick look at what the options are doing. We are starting to
It seems
come.
like it's big figure tennis everywhere, mate.
Yeah, exactly. Absolutely, Ryan. Yeah. It is. You've got it on the cable. You've got it on even on the crosses. Um, dollar Swiss, perhaps, but the dollar Swiss is more the 50 level, the 40-50 level. That really needs to go to go higher. But perhaps the PMI can give this a bit of a helping hand. Still running a bit of a long here. And yeah, but I'm not doing anything anymore unless this breaks higher. Tempted to buy more if we see the dip again, because the other one had failed on the Middle East situation. Gordon, looks like a large triangle on the weekly Aussie dollar. Yeah, just to finish on the Swiss, it does look like we're just waiting for the next catalyst to take us higher in the 92s. That's my view anyway. The Aussie does that big triangle on the weekly. Yeah, here, this one, right? Yeah, but you have to cut the spike to find it. Yeah, well, it's a rough one, but it's there. Yeah, it's a rough one, but it's there. 63.20. That's, I think that's the level that Daly is looking at with his speed line as well. If I go on the if I go on the tighter one, and I have this line in as well. This is the line that I've been watching as well, which roughly held last time. And yeah, Daly's looking at this 63.20 as well. This could be it, you know. This could be it. Yeah, low 63s. That could be a reasonable target also if the dollar starts to regain its mojo. But for the time being, we're really, yeah, trading big figures because the same thing is still valid for the Kiwi. We can't decide whether to close above or below. One day it's above, one day it's above, when the next is below 59 the figure. We really need to get back here under this 58.80 to accelerate. But in the meantime, we are really rangy on a lot of stuff. This one, I know it's a 10-year, okay, but it's going to be affected by perhaps the PMIs as well. And here as well, we are hanging around this 460. It has to go back above this prior high because it's a level that I've noted before as well. So 470, if that starts to go, then we can move higher again. Other side, that was the I think the Middle East spike as well, right? Lower. So on the other side, I again would watch 455, 465, and for as long as those things hold, it's no surprise that FX is also trading in ranges, right? That is the picture that we are in right now. And look at the twos, we are exactly hanging around 5% as well. Ryan, I'm going to give it back to you, mate. I don't have much more to show today. We're looking at.
Thank you very much, mate. Good stuff as always. Yep, we'll call that a day for today. Not a lot of data out this afternoon. Got some housing start numbers. We've got some, I think it's new home sales today. I need to look it up. Yeah, new home sales and some Richmond numbers as well. So that's about it. And top of the PMI as well to come. Have a great day, all. Thank you for coming and supporting us here at the Flow Show. And we will see you tomorrow morning to see what's going on. Have a good one, all.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.